There are plenty of stocks that have IPO'd recently in the last few years and they just have not done well. Everyone wants to know, is this new IPO going to be the next Apple or the next Amazon or the next Nvidia? Well, in this video, I'm going to show you exactly how to research an IPO. Hey, what's going on? This is Mallory Vodi with Financially Present, your one-stop shop for financial and investment education. And I'm going to be honest with you, when it comes to IPOs, generally, they don't do well. It's just not necessarily a good idea, and I don't quite recommend it for you, but you came to me for some research advice and some help with the IPO, so that's what I'm here for. All right, so IPOs, historically, they don't do well. They provide a certain level of risk, right? But they also have this level of return for the ones that do well. I would say second to day trading being the highest reason investors lose money, IPOs is another reason. Most IPOs do not do well. And that's because people don't necessarily do the right level of research. Investing in the market is all about time, and not just timing the market, time in the market. If this is something that you struggle with, you can always check my other material like my ebooks or even my investment course on how to invest and how to trade in the stock market. But in this video, let's just go down the route of how to research an IPO. First things first, I want you to go to ipohome.com. and it's going to route you to renaissancecapital.com. This firm tells you pretty much everything that they know about IPOs before they go public, and there are different tiers of memberships, but don't worry about that. I want you to just take a look and take note of a few things. The underwriting banks that are part of this IPO offer, this traditional IPO offer, the price range and the dates and any other details that give you what you know. Because the reality is you don't know enough about a company before it IPOs until after it IPOs. That's where most information is available and it's more public and readily available for people to now trade on that behavior. So you're only going to know the most information after it's gone public. So I want you to make note of what you know now, and then you're going to just save that for later, because trust me, you'll need it. So what I'm saying is the most you'll know about a company that IPOs is really going to occur after the first 3 months and even much later, okay? There's a 30-day lockup period that most traditional IPOs have to go through. And before that 30-day lockup period, people aren't really their true selves. The stock is not marginable, so that means it doesn't have loan value and people aren't able to borrow it amongst each other. And then it also doesn't allow options trading. So people can't bet on it in the way that they would for a stock that's traded longer. So for most IPOs, you should at least wait a quarter, if not 2 or 3 quarters. So we're talking about 6 to maybe 9 months before you really decide that you want to invest in this IPO, because now you've had opportunities to see the performance of this stock. I want you to remember this. An IPO is a fundraiser, but it's not a fundraiser for you. It's a fundraiser for the company that just went public. So they made money when the stock went public. You as an investor need to make sure that your funds get raised through the appreciation of the stock. And the only way you can truly increase those odds is to make sure you know as much information about the investment as possible before buying. So owning it several months after the IPO allows you to understand the true self of the investment. Investing earlier than that means that there's a lot of uncertainty that you have no clue or control about. So in terms of research, because yes, you came for research, I want you to create a watch list. So you can do this by logging into your brokerage account, wherever it is, and create a watch list. You can even set some price alerts and things like that. But this watch list you would create after the stock goes public, and I want you to take note of a few things. We're going to do some fundamental analysis. You have to look at what the stock is trading at, what the earnings are, what the earnings per share is, We're also going to look at things like, are there analyst reports that are being produced by reputable companies for this stock that we're looking at? Because ultimately, we need to know as much information as possible before we make this decision. And if there are other IPOs along the way, add them to this list, because you're going to see that the performance can be all over the place until things normalize. One big way to understand more of the companies, to see that the performance after all the hype has died down, is going to be the true self of this stock. So we need to see it when no one's talking about it, when there isn't drama in the news, or when there isn't a lot of competition during the initial IPO price, or the prices, the target price being changed, and all of these other factors that are IPO behaviors. We need to see what regular stock behaviors are for this particular company. You can only do that with time. If you're ready to research by looking at how other IPOs have done before, there is some room for error with that, because they aren't going to be the exact same as the stock that just went public. But if you really wanted to look at some recent IPOs, check the ticker symbol IPO. It's an ETF by Renaissance Capital, and it shows you IPOs, or the larger ones, within the last 3 years, and they're dispersed across this ETF in different ways, right? But what you'll see is that it'll give you a list of those stocks that are in the exchange traded fund itself, and now you can dig a little deeper and see, hey, how has the performance stood the test of time over the last 3 years for this stock since it's IPO'd? Because with the IPO ETF, after 3 years, it's removed from this IPO, or from this IPO ETF. So now you can have an idea of what the IPO market is looking like, especially on a larger scale, and if it's performing well, because ultimately you don't know enough about these companies until they have shown themselves to you in a non-IPO environment. So what are your thoughts? What are some things you would do to research an IPO? Would you wait, or would you just gamble and say, hey, well, it's only a little bit of money, I'm just going to buy one share and hope and pray? Odds are the IPO may be okay, but statistically it does not do as well as the regular market, and you may not even make as much back as what you originally invested. But that is part of investing in general. If you struggle with any of these concepts, I want you to check out some of the links below so that you can have some resources for yourself. And in order to stay in contact and watch future videos, I want you to hit that like button, subscribe if you're new to the page, and turn on notifications so that you don't miss out on future content. And until next time, stay present.